the Singapore Airlines issue, the turbulence, and then someone losing their life on that. So I always think, okay, these events are in isolation, and it's just like, okay, these are very rare, and you kind of go, it doesn't make any difference. But it's global news. Everyone in the world sees it pretty much, and then their psyche has changed. Am I going to get on that? Am I going to book that extra flight? And am I going to be a bit more scared?
Am I going to go on that Boeing plane?
Hi everyone, welcome to another market episode of World of Oil Derivatives. I'm Greg Newman, Group Chief Executive on its Capital Group, joined today with James and Martha and a newcomer, Meeta Chaturvedi. She's also from the research team, and hope to have you as a regular now, Meeta, or maybe another podcast, whatever it ends up being. Thanks for joining. And just before we start, as always, please remember to like and subscribe. It really does help out the channel. And we're doing quite a range of things now. We've got James's Macro Mondays that's taking the podcast area by storm, and we have a leadership podcast still going through, and we're going to have actually many more to come throughout the year. So don't want to waste too much time with this because there is just a lot to get stuck into. Martha, do you want to start us off with just like the summary again?
Yeah, of course. So we've seen Brent Futures pretty range bound this week. We've seen OI dropping significantly as players roll their positions into August. It's been really range bound, but high volatility and these low trading volumes. The OPEC meeting is next week. That's kind of, everyone seems to be kind of waiting for that. It's on the 2nd. It's held online now as opposed to in person, which I think a few people are disappointed at. And there's been a bit of conversation ahead of this OPEC meeting. I believe it was last week that Russia came out and said that they've overproduced, but they will be correcting lower. So due to technical issues, they said that they did adhere to the quotas in Q1, but cited technical issues for April's overproduction, and they'll submit a compensation plan soon. This also kind of links with this OPEC audit that's coming up. I don't know whether now's the best time to get into that, but basically because of the baselines they've been working on are from 2018, which is, close to 10 years ago, they're looking at completely redoing all of the audits, and they're getting 3 Western firms to put members' production capabilities under the microscope, getting these baselines more up to date, and this could significantly impact 2025 production targets.
That is interesting. We should dig into that in a bit. But I think just staying on the market summary for now, we've been talking last couple of weeks about not really being in no man's land, but kind of selling in some places, like buying in the back end of the curve. Back end time spreads really strong in Brent, but WTI having pockets of strength, but then overall market kind of weakness. So loads of funky stuff going on. But then we have, as always is the case, it seems like nothing's going on, but suddenly we're $2.50 higher on Brent, and there was not much noise in and around that happening, right? It just kind of started to rally, and as always, we try and pick, and the media tries to pick stories to justify why that happened. Obviously, that's what people want, right? Rhyme and reason. But I think this is, pretty telling that because there's nothing much out there, and because it's been dislocated with the macro for first time in a while, I think we'd be pretty confident saying, it's absolutely a flow-based thing. So there was a key selling flow out there. I think we've heard the rumors of, big producer hedging, and the classic thing, when there's a lot of hedging systematically throughout a time period, like a government mandate or whatever it might be, it tends to have this profile, right? It's, pockets of liquidity arise, it's traded into, and it can seem like it's range bound, but as long as it's high volume, there's a lot going on. If there's low volume and it's range bound, it means everyone's just staying out of it. But I think, being range bound and a lot of volume going through is quite indicative of, hedging essentially, and finding a floor to where the producer hedging can find its liquidity. And I think that was clearly around 81.50 to 82. I think it's fair to say, like, despite weakening of time spreads, despite margins being bad, all the rest of the stuff, that was very stable. And this is despite a lot of decreasing length in the managed money. We were talking about them being like longest for a long time, and they liquidated, so that's a lot of selling pressure in addition to the selling pressure out there. So actually what's happened is we found this floor, which means there's a huge amount of buyers actually out there to absorb this, and once the selling dissipates, it's like, you've got this pressure pushing down for a time, and then suddenly you relieve it, it just kind of drifts back up, and that's exactly how it looks. And there's no headline you can attach to that, but headlines will start to get attached to it. And as you build momentum on the upside, that's when you get like the renewed speculation, the fast money coming back in who are, getting into this hype, don't want to miss out. The FOMO starts happening and the cycle will start again. So I think this is quite relieving for me. I don't know about you, Martha, because we've been talking about this for a while. Like, what is kind of trying to figure out what's going on, and for it to suddenly have this pop, it kind of gives you that confidence that actually it seems like things are making a little bit of sense again. Do you see what I mean?
I think the only kind of headline I've seen this week is the reduction in the floating storage. It went from about 77.7 to 73.137 global floating storage million barrels.
Yeah.
So fairly significant. But I mean, apart from that, we saw the builds in the US crude inventories, building Cushing, not great product news either. And then refinery utilization's up, exports are up, and there's still a build in the US inventories. Like, it's just pointing to production being almost out of control in the US at the moment anyway.
Okay. So I think we'll get to macro in a little bit, James, because just before that, Mita, have you got the refinery margin kind of summary? What's been going on?
So refinery margins have come off over the past week, at least in the M1, and Asian margins are really bad. They've not been this bad for a year because of primarily due to gasoline weakness. There's expectation for the Sing 92 to continue to be weak, at least for the near term. So things are just not looking that great for Asian margins on that front. For gasoline, I think Memorial Day was something people are waiting for. That's the start of the summer season. Figures are not out yet, but I think estimates for now have been slightly disappointing.
Yeah, I think this has definitely been the big one. So on the way down in flat price again with Brent, there was a really, really, really strong correlation with gasoline cracks and actually slightly more EBOB than RBOB, but very much the same, almost like for like. And then once we hit this kind of, as I was saying before, this floor and the rebound, that's now disconnected with gasoline. So I think, what does that tell you? I think that a lot of the de-risking and the managed money length in Brent was also in RBOB and gasoline, which makes sense because a lot of the reason you'd be bullish Brent, if you're bullish, it has to be product based because people don't buy crude, they buy products, right? The end user. So what product is going to really drive that strength? And that the big hope was gasoline. So I think it's logical that was the one that had the most length in. And then as you're de-risking, that's the one that's the most vulnerable to a sell-off and correlated with this like weakness and reduction in buying flows and an increase in selling flows. That makes sense. So as it's dislocated again, that's the interesting thing, right? So if it's the big hope, it's worrying that gasoline isn't retracing because you would have, the hope as a bull is that there was all these stop outs, and we have been hearing about stop outs, gasoline cracks and the gas nap, so versus naphtha as well. So you would think, now that's been relieved, it would come back up as well. But clearly, and this morning we're down like another 70, 80 cents, I think, in the Q3 cracks in the EBOB. So that's either people aren't done with their stop outs, or there genuinely is a lot of weakness and maybe selling flow in the market that the market just can't absorb. So I think you've put here, like, optics are poor, right? I mean, we've got the Biden. Do you want to just talk about the Biden thing? That was quite a big deal as well.
Yeah. So just last week, Biden announced that he was releasing 1 million barrels of gasoline from the Northeast Gasoline Supply Reserve ahead of July the 4th and all of this, like, quote unquote driving season that we have now. But in reality, this has been planned for a long time, and this isn't reflective of the optics that's been given. Both sides are claiming that, this is just, he's falsely pushing down the price, like how they said about releasing from the SPR, and then Biden saying this is great, I'm going to lower prices for the consumer, I'm helping inflation. Yeah. But in reality, this was a bipartisan bill that was passed years ago. So it was actually from both sides. It was Trump that wanted to sell the stockpile originally. Taxpayers have spent $200 million maintaining this, and it's been about 10 years, and the gasoline itself is only worth $103 million. They haven't used any of it. It was after Hurricane Sandy that it's been made, and it's just been sat there wasting money. So I think that it makes sense that parties on both sides wanted to get rid of it, because, I mean, if they haven't used it after any of the storms, they haven't had another disaster like Sandy. I'm sure when they do, they might kick themselves, but it just doesn't seem a good use of money at all. Yeah,
if you've waited that long, you'd think they'd wait for hurricane season. But anyway, as you say, it's quite smart to use that as a narrative. To but you're going to do it anyway, so you might as well use it as a look. I've got prices lower, and I think it's all about, as we always say, it's all about sentiment. So RBOB prices being weak, and then this coming out, it's a good narrative to bolt onto, and then you know, the big players, that there's a lot of money in RBOB, I think, that isn't, I don't want to say smart money because that doesn't mean anything. I think it's just not the industry money. So they would have been buying and selling on inflation and things like that as baskets. So them selling out will be on macro headlines. So this helps them justify selling, or at least getting rid of their length. So it's a pretty smart move because it exacerbates the selling, I guess. But to your point, we've only just started. We're not even in June yet. And this is meant to be, June is like the key month because you're starting to actually have July, which is the key summer month, as the month one where the most liquidity is. And then you're going to have the rest of the summer. And then we get hurricanes around all through June to, what is it, October? I get this technically, but typically it's like September. So there's a long way to go for gasoline to spike or potentially spike. So they're kind of counting their chickens a little bit on this weakness. So it could be actually, if anything, a bit of a shock towards the upside. But anyway, I guess that's gasoline. So summary: too much length, stopping out, Biden jumping on the bandwagon with some good optic stuff. So kind of, yeah, all makes sense. Where we go from now though, and what about the rest of the products?
So gas oil, at least in Europe, has been really range bound, although it has come off slightly week on week. There are some bearish headlines. For example, I think the Dangote Refinery is going to start exporting diesel to Europe in the summer alongside gasoline. And other than that, I think non-diesel, gas oil and diesel import volumes into Europe are expected to reach the highest it's been in 16 months. That's around 5.5 million metric tons in May. So so structure continues to be in contango until August SEP, but it has otherwise like flat price. If you just look at ICE LS gas oil, has just been really range bound. Eastern gas oil has been a lot better. Sing gas oil has been slowly rising. The July-August spread is now at negative 4 cents per barrel. And the East-West has, in the past week, has risen from negative 30 per metric ton to $25-40 per metric ton. So Eastern gas oil has definitely fared a lot better than European. If you look at jet specifically, a lot of bullish headlines about just record high passengers screened at US airports. I think it was 2.9 million passengers as of 24th of May, which is a new record high. But if you look at Europe, price action has just been uninspiring. The jet diff rallied until like this 22nd of May. Then it came off and it's just been plateauing ever since. So considering all the expectations of summer and just the bullish sentiment that is still attached with European jet, it's just been really range bound and just not that great in terms of price action. Asia again has been a little more interesting. The June-July Kero spread, for example, went from negative 20 2 days ago to 20 cents per barrel today. So, and regrade has also broken out of its ranges. So it had been around like a higher level, like the upper range was around negative 1.30 per barrel, and now it's at, I think it's a little over negative 1.1 per barrel. So
okay,
yeah.
This is important because I think this year again we started so hot on products, and the first one to go was distillates, and that been pretty damn weak. The prompts going so weak it went into contango. A lot of stop outs, a lot of people doing badly, blah blah blah. But I think why that's interesting to me is because it was the first one to go, and now gasoline is coming after it. So it's basically everyone getting way overhyped about Q3 too early, dragged up the whole curve, and then by dominoes they all just kind of starting to weaken. So we had gasol first, fuel I think is probably one you could say 0.5%, then gasoline. So it's all just like dominoing. But at the same time, because distillate started first, it's actually found its floor first, I would say. And as you're saying, these things, it might not be like blowing us out of the water how much gasol has changed, but these are structural things that you're talking about. A spread going from minus whatever to minus 4 cents, barely a contango, is significant. Kero, the jet fuel in Asia, going from a deep contango to like a pretty decent backwardation. It might not be rallying aggressively, but that's real physical like signals that this market's actually potentially quite strong. The record high passengers shouldn't be scoffed at, right? That's pretty significant. The only thing I would say to stop this rally, because the risk reward does look so good being long distillates right now, given the low levels, given the low contango, given we're heading into summer, is like, I know it's a bit random, but the Singapore Airlines issue, and then that was followed by the Doha, I forget which airline, Qatar Airways into Dublin, the turbulence, and then someone losing their life on that. So I always think, okay, these events are in isolation, and it's just like, okay, these are very rare, and you kind of go, it doesn't make any difference, but it's global news and everyone in the world sees it pretty much, and then their psyche has changed. Am I going to get on that? Am I going to book that extra flight? And am I going to be a bit more scared?
Am I going to go on that Boeing plane?
Yeah.
I think the whole of this year we've just seen all these Boeing disasters. Their stock went through the floor. I think it's definitely something that's been spoken about so much that it really is on the forefront of people's minds, I think.
Yeah. But that could impact demand massively. So that's the only thing I would say is a threat at the moment. But if we were going to have it, you would have thought we'd already have that blip, and maybe it will come out in the numbers, because I guess the numbers are lagged. I don't know. Are you guys going to still do your summer holidays?
I'm planning air travel for the summer.
As a kind of, I don't think anyone's going to change their plans, but I've had my share of like not enjoying flying, and that wouldn't have helped during that period. But I think now you just think like, come on, it's just. They came out with a BBC documentary actually on it recently, and again they're going through all the technicalities. I think it's actually quite helpful to explain a lot what happened and what happens, and then be like, look, at the end of the day, just book your flight. Like, these things are going to periodically happen, and it's still way safer than like every other type of travel. It can't. You shouldn't let it affect you, but the everyday person, it might temporarily, and then people, I guess, something else distraction, and then move on. But
there's a really good one on Netflix, just to plug that for no reason. It's called Downfall: The Case Against Boeing.
I've seen that as well.
It's really good.
I mean, it is worrying, but you still get on the Boeing plane.
It's all personal problems. Like, everything has that human element, though. Like, it's not just like the machines falling around you. Like, it's people not doing their jobs properly, which I guess makes it even more concerning.
Yeah, I'd rather trust a machine than a human. Yeah, I know what you mean. But I guess the point, it's almost like a macro point, James. That's why I was trying to lead you in there. Like, we have global events all the time, and there's fear and greed drive markets, and fear from these types of things. I mean, even the most extreme of things, wars like 9/11, like they have like lasting impacts on people's psyches, or do they? I mean, historically in markets, you think it's always going to be like this, like COVID, and then suddenly we're back to normal, and then you forget about it.
I think they do, and even in this case, even if it's just 1% of people that are impacted, that's still an impact. It's still an impact on the aviation demand.
So you believe that it will have an impact?
I do. Small,
but you know, because we talking about optics this whole way through. So Biden comes out and uses the statistics. That's, the statistics can be very dangerous sometimes. Uses that to say, yeah, that's why prices are going down, and it's what we're doing. You know, then it kind of exacerbates it. So it might not seem, because we had a record number now, distillates prices improving. But if we have a weakness again, and then you get a lagged data response from recently that actually flight demand's gone down, then that will spiral again. And how, you know what I mean? It's always a lagged impact.
It takes a lot to turn that psyche around as well. And if there's another event, then it escalates.
But then how do you explain? Okay, so let's distinguish between, and I think this is important because it's people and then there's markets. So I know they're obviously very intertwined and it's psychology playing out, but like COVID, for example, that if you had like rewind 10 years ago, so what is the impact going to be if there's a global pandemic on markets? You would just say everything's going to sell off generically, right? I don't think it's too hard to understand, even if you're not big in financial markets. But equity markets had like the biggest, after a temporary collapse, had like the biggest rally ever, right? And then so did oil.
But it had its biggest, by far the biggest stimulus ever.
I know, but but that's still what happened. It's not like, you know, it's in, and then suddenly we are in a world where we got back very quickly from COVID and we just don't talk about it anymore. So I guess what I'm trying to say is it's a bit like a football manager having like the terrible time and then he wins a few games, or they win a few games, and then suddenly like the sentiment's back and you kind of forget about it. It's just like that. You need the markets to kind of like shrug it off a bit with the price action. And then we go, oh, okay, that's... Do you remember we were talking about this with the diminishing returns or diminishing impact of headlines, of the same headline as you go forward? So Israel-Palestine was a big thing for driving markets, you know, a few months ago. And obviously we hear news about it all the time. The oil market doesn't respond to it anymore, whereas it used to respond to escalating scenarios. Same with Russia-Ukraine. Russia-Ukraine war is still going on, but the market doesn't react to it now.
But also if you're making money the equity market's going up, there's nothing better to allay your fears than making money.
Yeah, I guess so. But I guess you see something, you wait for everyone else to react, and a market's perfect for that. The market is other people reacting. And then if it stops reacting to these things, then you start to naturally discount it in your head until you forget about it, and then suddenly it's insignificant.
That actually leads into what I was going to talk about, because the economic data last week was pretty secondary. But what I was going to talk about was volatility. So there's massive complacency in the market. So we've gone from one extreme to the fear to the other extreme of everybody's making money, everything's going up. So the VIX, the equity volatility, is at 4-year lows last week.
Yeah.
And the MOVE index, which is short and medium term interest rate volatility, is now at 1-year lows.
Just quickly, because we had probably the most votes ever on our poll. It was record breaking. 319. And it was, what is the best trade right now? Is it the S&P? Is it buy the S&P? Is it buy Brent? Is it buy silver? And by far, people said buy volatility, buy the VIX. So it seems like people are aware of this. 42% of the most votes we've had. That's significant. And I think we were all saying as well, VIX is a good buy.
But that goes completely against being long equities. Because if you're long risk assets, you're implying that the VIX and the MOVE index are going to go lower.
Yeah, it's funny. I've never fully appreciated, but people say if you're bullish, volatility goes down. So that's how you're explaining it. Because it's a risk asset. So by having a bullish sentiment about a risk asset, it means you're not worried about it. That's weird.
Yep.
Okay.
Which to me smells of complacency.
Okay.
An interesting point on that, the Nikkei, which has had a huge run recently, that had its biggest outflows ever last week. And hedge fund managers had their biggest outflows in US equities since January.
Yeah. Okay. I did see that actually. The hedge funds bailing out like mad. But we actually spoke about this, I think it was actually almost last year now. Were you on this podcast last year? Very end?
No, January.
No. Okay. So it was the beginning, and we were saying, if people are expecting the unexpected, it's not unexpected, it's not going to happen, just type things. If the hedge funds are all piling out and everyone's worried, it's so nonsensical that we're seeing these things and yet the VIX is low.
I was going to say it implies people aren't worried.
No, I'm saying, to me, it's implying seeing the action ahead of us, right? So what's all the thing people are buying risk assets, they're buying loads of gold, silver, hedge funds are selling equities. People are hedging basically against mayhem, and yet the VIX is low. Doesn't that tell you people are well hedged?
I was going to say slightly differently. If you look at the next chart, it tells you people assume volatility now. If it's low, their money's starting to move out of equities, as we've seen. Bonds, volatility in that is low as well. And we've seen a huge move up in commodities. So if you're looking for returns and volatility is low in equities and bonds, it's not going to be there. So commodities is where the money's moving to.
Yeah, and VIX is a index. What does it include?
S&P. The VIX is the S&P volatility.
Okay, so it's not a benchmark for volatility outside of that.
No.
Yeah, so if you took a VIX equivalent of S&P commodities, basically general markets, it probably wouldn't be that low.
Absolutely, because volatility in commodities has picked up. We've seen some huge moves recently.
It's a fear event from the Singapore Airlines all the way to people have been worried about markets for 2 years now. So VIX is probably not the best way to reflect. It's not complete, is it? As a reflection or as a kind of a summary of where people's heads are at. Is that not fair? Because you're saying it's the low and it's like people getting complacent, but they're not, because they're buying a shitload of gold, silver, all the things that you would buy if you were worried about markets falling. Do you know what I mean?
Yeah, well, they're just moving into other assets.
Yeah.
Commodities have been so cheap compared to, we looked at the chart a couple of months ago, compared to tech stocks. Commodities are incredibly cheap. If you're not getting your returns through equity market or bond market, then what are you going to head to?
But why is that complacent then? Do you see what I mean?
But the market's not fearing an event.
On the S&P.
That's what I'm implying.
Yeah, but they're only on the S&P. But it's everything else they are. Do you see what I mean? The general market consensus is be worried, so buy gold, buy silver, Bitcoin, whatever.
Or just chase whatever's moving.
Yeah.
That's why I think algorithms distort markets, because they'll follow trends. They don't look at fundamentals at all.
Yeah.
If gold's going up and cocoa and orange juice and whatever are going up, they will chase it because...
But sticking to narrative though, this is what I think we need to consider more and more. Like we are in like a centralized world because of the YouTubes and the information we all have is kind of the same information now. I know Twitter is great or X, whatever, but at the same time, we all forward each other read the same stuff. So I just think that you can get very good sense of where the general market participants' heads at, and it feels like it's still in the fear mode.
I think fear's fallen a lot since the Israel-Iran, that Saturday night when the 500 drones or whatever were flying.
No, fair.
That I thought was peak fear, and it's come off a lot since then. And if there was genuine fear in the markets, people would be buying bonds and expecting rate cuts. And now the OAS is pricing just 32 cuts by year end in the US, which is the lowest it's been. Started the year at 175, now it's 32.
So you think, if you like speaking to the everyday person, what is being talked about generally? I still hear all the recession talk still, the treasuries. Jorge was on here talking about the world's going to end, or at least the Western world. So yeah, this is bandied about, but I guess it's nothing new. So that's probably what you're saying. It's like apathy of the same kind of fear headlines, and it plays into what I was saying before, which is like people get tired of that same shit. So we need the new thing to be worried about.
In last week's data, if anything, is secondary data, but consumer confidence has ticked up slightly. The flash PMIs have ticked up slightly. So it's slightly better than expected. So the fear, that headline economic data fear has fallen. I guess the key, we have PCE deflator on Friday, but the next key one the following Friday will be US payrolls.
Okay. I didn't want to labour this point, but I just find it super interesting. So Mita, from your point of view, like general, like different demographic, to me and James, not that we're old. We've got four different ways of looking at things, different like backgrounds, personalities.
The same age.
Yeah, and you, Martha. Yeah, but the point is that we definitely have similar information, but also different information. How do you feel about markets right now? Not just oil, just in general.
I think I agree with what James said about people just chasing what is moving right now. Also with commodities specifically, at least based on what I read, a lot of the reason why certain metals, be it copper or nickel, might be rallying right now might also be demand driven, which is not a good indication of, going for what, like, it's not necessarily a fear impacted market. They're just, I think EV sales or just like certain demand sectors for these industries that would use these metals more has just been on an uptick, especially with, I think, in Asia especially. So I think that's what's getting these markets, I mean, of course, correct me if I'm wrong, but that's what's getting these markets moving as well.
That's the key point, is what you think, how you're looking at things. That's how you're seeing it. So you see it more of like a positive thing, actually.
Exactly. So I don't think there's necessarily fear mongering there, or like necessarily, I think that's why the WIX is also so low. I don't think there's like a bad reason for these people or these investors to go to metals or to commodities. I think it definitely is more demand driven than fear driven.
No, that's like really valid. And again, we've talked about China as a proxy for Asia, I guess, being so big buyers of commodities. They had a switch, right? They were so bearish for the first time in so long to pretty damn bullish, and people kind of not, as you said, James, like that flip of what did you call it? Like when you've got a consensus, it's quite hard to turn that thinking. You said it earlier. I can't remember, it doesn't matter. But the point is that like, if you've been buying into a narrative for so long, it's quite hard to flip that entirely. Like people will go, oh yeah, and they still hang on to it. And it's only when you get like insurmountable evidence that you start to be like, okay. So that feels like the scenario with China, at least, because everyone was so bearish, yet that every indication that it's bullish, at least from a market perspective.
That's something pointed out a couple of weeks ago. Economists will hold on to their view because the only thing they've got to lose is their ego, effectively.
Yeah.
So they'll hold on to it as long as they can. With trader, it's the price action, and it's your P&L, and when it's an L, you've got to get out.
I agree, but I've been thinking about this a lot because I was always slated this kind of thing. But actually, I think it's unfair in some ways to say economists, that they have to take a long-term view. So you can't be chopping and changing either. You have got your own trade on in effect. Like, I'm bearish this is my long-term outlook. There's going to be things in between. Just if something comes out, you can't suddenly be like, oh, well, I'm wrong. And then it flips again. Oh, that will not help your credibility. And you're meant to be helping people feel comfortable about like predictions and markets. And I know they're always wrong, but they've still got to put their best foot forward and be like, this is generally what I think. So I kind of think it makes sense that they slow, but I think it's actually more market consensus, I feel, takes its time. And that's why we have such big corrections, because it's either short covering or long covering, I guess. And
the market's always slow to turn. I remember, for instance, the financial crisis.
The price action will be quick to turn, but people are slow to flip their positions. Is that fair?
Yeah. I was going to say with the financial crisis, I remember we could see it starting to unfold. The cost of dollars, short-dated funding went through the roof. And then...
You are showing your age now.
Yeah. Gone down a hole here.
Yeah.
Next I'll talk
Which
about
crisis
87.
was this? Yeah.
But you could see it unfolding.
Yeah.
And then the equity market started to sell off, and then the Fed came out and said, we're watching the action, ready to act if necessary, a simple one-liner. And equities suddenly went to all-time highs again because they thought, well, the Fed's ready to cut. But you could see it all starting to unfold, and it took months to play out.
Okay. So your summary, basically, Mito, is actually more the positive side, and Jorge's latest ramble is about demographics and how the world's population is dying out, and he's been telling you guys, I'm sure. Yeah. So I guess we can always rely on him to be the fear kind of narrative, but I kind of. Yeah, and you think your peer group, I mean, for you too, Martha, do you echo what Mita says? There's not like a negativity around markets right now?
I think there's a sense of dislocation, especially with the highs that equities are at. It just seems that people are starting to become almost, on one hand, greed driven, but on the other hand, kind of there is that skepticality coming into the market positions. And I think, especially within the oil markets, I think there's so much talk of being disconnected from fundamentals recently. Even with people seeing the gasoline sell off, they're like, oh, that's not right. It doesn't matter if it's right. It matters what people are buying and selling. And I think how you were saying about people closing out of their positions, that's so powerful. And that's what causes the really drop down. And then the algos come in, and then it is kind of that trend following trend. But I think it is a case of kind of dislocation, and then with that the fear comes eventually. But it just shows how kind of ballsy people are getting with the height of so many of these things.
The general, it's so hard to define this, but the kind of in and out traders, the retail traders, I guess, but also people buying into hype or whatever, they're so comfortable with that now. The idea of one bubble used to be a big deal, and it would make shock waves, and there's 10 bubbles a year now, it feels. So it's just something people are just, and they're not scared of it. To go back to our point about fear and VIX and stuff like that, people are loving the volatility, and they're chasing the most volatile thing all the time. So yeah, I guess a lot of people made money out of Bitcoin bubble and then GameStop bubble and things like that.
I think GameStop happened again recently.
Yeah. Exactly.
I think to an extent, though, it's given people a lot of almost false confidence. You see people on the internet oh yeah, pile into positions, let's go, let's drive this up. And there's 10 of them. I think people kind of overplay what their hand is, and they kind of forget that millions and millions of other people in the market also are buying and selling, and it's easy to get caught out like that.
It is, but go on.
And one thing I would say about these events, they used to happen every 2 or 3 years. Showing my age here, but we had 87, then 89, then 94. Bond crash, 97, 98, long-term capital management, Russia default, Asia crisis, then 2000. And all of a sudden it was 7 years till the financial crisis. And then it was, 13 years till the next event. And the reason it was such a prolonged period, in my view, was because the Fed kept rates so low for so long, which helped risk assets go up. But of course, the Fed can't, when we have the next event, the Fed can't react as aggressively because of the scare they've had with inflation this time around. So I think when they start cutting rates, I do think it will be more aggressive than the price action suggests at the moment, but they will probably bring it down slower than they would like to because they don't want the risk of inflation coming back, which would strangle the economy even more.
But it's funny because generally speaking, Martha and Mita are more positive looking. Yours more complacency, fear, that kind of stuff. And why is that in general?
I think because the unemployment rate's picking up.
Okay.
In Australia, UK, obviously in the US, and that's always a trend. It doesn't pick up 2 basis points and then drop back down again. It's the start of a trend, and it becomes self-fulfilling, I think, in many ways. So because we've seen it tick up, retail sales we've seen fall off a cliff a couple of weeks ago, then I think the next move has to be a cut by Fed. And once the unemployment rate starts effectively, keeps going higher.
What's the significance of unemployment? Do you not think? Again, even as we're talking about SP, things like that, I'm like, but there is a different market now with so many retail traders having access. I do think there's fundamental changes in market dynamics. Could that not be said about unemployment as well?
My bigger concern is with housing, because the housing, we've seen the number of sales has fallen completely. People can't afford to sell, they can't afford to take on a new mortgage. So people aren't selling, but the reason when selling starts is when unemployment ticks up and people are forced to sell. So obviously demand will fall, which will, as unemployment goes up, which will help bring inflation down. But the housing market is expensive, and that will start to break as employment starts to tick higher.
Is it though? I mean, like, people tell me this, and like my property just like hasn't gone up from everyone. I don't know. This has been like 10 years.
Yeah, I think central London house prices is unique. It attracts international money.
Yeah, sure, that's true. So you had international. So 2016. Before 2016, it was the fear of the Brexit vote, what that would mean. Then you had the vote. Then you had a period of stagnation. So no one wanted to buy central London, or no one. I think the international money was not that keen, and waited to see what happened. Then obviously we did have Brexit, but also COVID. People wanted to move out of central London. So yeah, fair enough. Like central London is probably a different beast. Yeah. And you think outside of central London, prices have gone higher.
Yeah, if you look at the US, we had data last week. Home sale or home inventory, that was it, has jumped aggressively.
People, what does that mean?
Houses listed for sale.
Oh, I see.
And it's record numbers in China. We know that housing property is a huge problem there, but in the US,
but again,
inventories are going up.
This is like the whole that I keep forgetting the guy's name, the anti-fragile guy, Black Swan.
Nassim Taleb.
Yeah, Nassim Taleb. His whole. I've never seen a. What is it? Never seen a scarcity or a shortage not followed by a glut, but he has seen a glut not followed by a shortage. So again, that's just like so many people made money out of property for so long. And then you had the stuff in China. It's kind of, you do expect leveling out, things to burst a bit. I don't know. To me, I wouldn't say that's indicative of like a big reversal in trend. It's just the classic people getting overhyped, and there's always going to be demand for houses, right? I mean, is this not recency bias again?
I think at a certain price. The key was there's an 18-month period when COVID struck where house prices in the US went up 45%, but the mortgage rate went from something like 1.8% to just over 8%.
Yeah.
And that's a huge move.
No, it's true. I don't know. How do you look at property? Do you see it as unaffordable?
Yes. I think that's like the biggest thing for like people in our generation, is that you'll never be able to afford property. I think that's
you are told that all the time as well. Like, is that actually what you believe, or?
I think it's just everywhere. As you said, information is so available and on like social media or on like, let's say, an article or something, like depending on the channel you're reading. And I think both those channels keep talking about how unaffordable property is right now, especially the younger that you are. That's just how I've always looked at property.
I mean, in London, it's unfathomable. I live in East London, and like a one-bed and Bow, not even near the tube station, like a 20-minute walk to the tube station was like 350 grand.
Yeah, no, fair
it's
enough.
It's madness.
I think I can think of maybe going to Asia and buying property after earning here, but like that's
you say that, but you know, like Japan, for example, like it got out absolutely insane. You'll know about this, right?
Yeah, I read this week, I think there's 9 million now vacant properties in Japan.
Yeah, but again, because it went absolutely nuts for so long.
Also the demographics.
Right, yeah, okay. So what, people getting older, dying,
yep.
Vacancies going up, that kind of thing. So I guess, in this country at least, people want lower house prices, but then so much of people's wealth is tied into houses, and it was for the last 30-40 years, that's what people did, right? They bought houses, and so that house prices getting weaker is actually pretty bad for our economy, I think.
It's also bad for politicians. Hence you get their buy to rent schemes or whatever schemes they have, because it's suicidal if house prices fall for the government.
Yeah, but again, it's mentality, and if you judge, or if you look at, say, Germany, obviously they're judged on their basically engineering their production, things like that, and then suddenly you don't have the cheap energy from Russia or cheap and accessible energy from Russia. They're relying on, I guess, skilled immigrants or people actually staying in the eastern countries or countries around Germany. They're actually just staying there now, and there's all these things that were helping Germany be what it was is now not there, and it's on the decline. And apparently for a long, this is me, I heard this, I don't know if it's 100% true, it's just not a thing in Germany to own property. Like, you just rent. And that could be absolute crap that I heard on a channel. But as in, what I'm trying to get at with that is there is just this mentality that you need to own a property in the UK. And I just don't know what to say about other countries. I've lived a bit in Australia, but I don't remember there. It's too young. But you know, what is this obsession with buying a house? It's because it comes from like, it's what you should do. So is that changing? Will that change? Does it have to mean that prices will go down? It's because then there's all these like willing buyers waiting at a certain level, right? So I don't really think that's ever a thing that's going to happen personally. It's just a mentality shift into, okay, what are the alternatives? But then you might say, but rent is going up ridiculously, and that is where regulation steps in, that we're meant to step in. So I don't know, the housing argument's never a big one for me because it's always looking back at the last, say, 40, 50 years. But then the last 40, 50 years was a whole different mentality. And then we finally had the housing crisis. And then it's just that I don't know if the next generations are thinking the same way. If you guys had, you know, if you were able to leverage it and just about get a property you wanted, would you put everything on the line to do it?
Yeah, that's what you're going to have to do. If you're our age, you will have to put everything you have into getting a house, yeah.
As in you will want to do that. But why? Where is the want to do that?
I think it's just, it sounds stupid, but it's just a sense of having something.
Yeah.
It's not a sense of, oh, my landlord's going to jack up my rent in 2 days because they feel like it. Or like I can actually deal with the mold growing in my house without getting told off. Like it's just being able to have that control. I can hang a picture on the wall if I want.
So there's value in that ownership and control.
Yeah,
that goes
and then
beyond.
you'll have, like in the future, you could, you know, use it to
rip off people and rent later on. You did it to me, I did it to you. No, but the point I'm trying to make, James, is that like there is that underlying, if they've got the cash and they're able to leverage, they will do it because it's a want that goes beyond investing. So how can we think that's?
I think it's just human nature.
Yeah, it's stability as well, just like having a house that you wouldn't have to keep moving out of.
But then you're almost propping the market up with that mentality. It's kind of my point. Do you see what I mean?
It is UK human nature. Because you're right about Germany, and it suddenly took off about 2018.
You took a while to support my point there.
2018.
So it is true about Germany, is it?
Yes, it is.
Okay, yeah.
But what's happened there, it's gone up massively. Something like, I don't know the exact numbers, but then it's collapsed in like the last 6 months. So people are now getting burnt. But
also buying? The next generation ready there to buy?
I think people now are walking away from it, having been burnt.
Okay, interesting. So if we move on to like looking forward then, so we've got kind of Brent flat price back to 85. I think that's a pretty decent level considering how weak we've been for quite a few weeks now. Gasoline's still getting a bit trashed, but at the end of the day, yes, as you said, Mita, margin's not looking great, but I would say the general feeling is we found floors. We found the gasol floor, we found the Brent floor. Gasoline we might do, and we're just on the cusp of, as Martha said, it's a bit of a quotation marks thing, driving season, but you know,
hurricane season 2. So I think this is going to be something we talk about every week because a hurricane that's the thing. It can happen very, very quickly. It can start getting traction on a weekend, which means the opens are going to be pretty volatile and pretty crazy. You're not going to want to be short over the weekend in gasoline at least. So there's a lot to I don't want to say look forward to, but like to anticipate. In terms of like Googling oil then, what's on people's minds? Well, the main thing on people's minds is the OPEC meeting next week, the E-meeting on the 2nd of June. I think the market's expecting for the cuts to be continued around the 2.2 million barrels a day, apparently, into the second half of the year. I think that especially Asian refiners are hoping cuts will continue. Their margins are looking so bad, as we said earlier. I mean, there's not too much to say about it. I know that the kind of overproduction of Russia and I think especially the UAE may have problems with the new audit, but that's not for a while. I think, I don't know, is there anything else to say?
Not really. I think I know what you mean in terms of there's not any more information, but I think reading around it, it's usually we have a lot more leaks by now because there's anticipation. But again, headline fatigue. We've been talking about the OPEC headline for a long time, and there's just I think it was someone did a review of it. Respondents said 80% of people believe they're going to maintain the cuts. So it is just a given, really. And I think the fact that it's online, that's new information for me. The fact that OPEC meeting is going to be online, that's quite interesting because it's always around the headquarters and there's press around. And last year they banned press as they felt like they were losing control of the narrative, and journalists were writing bearish stories and To not even have it in the headquarters now, there's just no circus around. It's going to be harder to report it on the media, harder to create a bit of hype, is one way to look at it. The other way to look at it is, I guess, it's a lot easier to leak headlines. everyone's talking on a Zoom and you just go, yeah, this is what's, that's probably quite like. But thinking, what is there to say? Unless it's a shock. And the only shock that can happen is an increase, I think. And that would be a big shock. So I think it's almost like people, I would think as a risk reward trade, I mean, being short, if anything, on this headline, if you want, a short term kind of idea for where prices can move, it's much more weighted to the downside. However, I don't believe that will happen. I believe it's pretty much built in that they'll maintain. They kind of think they have to. The main indication for that is the Russian situation, as you said. So, we don't know exactly how these guys think, but it does generally feel like any price movement is, the physical moved. It's like they think it's a live physical price and physical global supply is happening in front of them. So when there was a price move downwards, we believe it was more flow driven, producer hedging, things like that. They would have been like, who's producing more? Like, who's producing more? And then Russia, sorry, I just, and that's how it felt to me. So it's like, okay, I'm sorry we did that. We're going to unwind that and be aggressive and publicly say that. So, getting back in line. So I think if anything, that sell-off just helped them to agree that we're definitely not going to not do this. And I guess see how it goes. And I think it's kind of, for them, it's fingers crossed that the summer does plan out as expected. And that's it really.
I don't know if this is completely just inconsequential, but also I think it being online after the Iranian helicopter crash, that may not want to travel.
Yeah, true, actually. I forgot about that.
I just thought of that.
Yeah.
But
or all the turbulence news, as we said, no one wants to air travel.
Yeah, maybe. I mean, we'll have to wait for their numbers. But as a quick acid test, you guys just didn't seem to care. So that's one data set. I think for me as well, I'm not going to not travel. So I don't know. It doesn't feel like, let's see. But the one thing I wanted to just touch on again, because you mentioned, Martha, last week, and it was new news for me, the FTC allegations against shale, which is nuts. And Scott Sheffield, he loves a bit of a fight in the media. He's quite interesting like that. And he said it's crazy. Like, how can you, I think he's just said his general thing is it's a scapegoat situation, right? And I couldn't agree more. Like, it's so random to accuse the shale oil community of colluding with OPEC. Like, again, people love to believe, and I don't mind a good conspiracy theory here and there, but to get all these people to agree something like that, do you know how hard that is to do? Look at the troubles that OPEC have. You think you're going to extend that to US independent CEOs? Like, definitely not. Everyone's out for themselves in their own localized area. And the weird thing about it is they're accusing them of colluding to reduce production. They increase their production loads. So it's just all noise, but just a bit bizarre how in the US, I guess you can sue for anything, and it's just that whole situation. Do you have anything to add on that? Was that what you were? I'm
just reading it now because I'm waiting for something I'm waiting for some evidence. Like, I'm waiting for something to explain why they're doing it.
Like a phone call or someone.
Yeah, someone's leaked something, or these text messages, and I just haven't seen anything. And he's saying these I'm being scapegoated. They're built on a false narrative. But I mean, there doesn't seem to be any narrative.
Yeah, I think it's a very US thing. And again, like I'm saying about OPEC, when the price moves, something must have happened in the physical, which is not the case, right? We say it again until we're blue in the face. Like, markets move on buying and selling, flows, positioning in the derivatives, physical prices off that. So generally speaking, there's no indication. I don't know how you tell this story, but like Biden's jumping on to prices weakening, saying we've released this 1 million barrels. It's not important what the truth is. It's what people believe. So I think maybe what they're playing at is like, look at the price going higher, look how your inflation, look how prices, you've got someone to blame, but that's the best you can do, right?
I mean, yeah, it's just kind of all these mega mergers, mega majors turning kind of an oligopoly in the basin. I guess they don't really like that. I mean, just typed in Scott Sheffield Pioneer Proof to look for any proof, and the second headline is this American headline: Big Oil's un-American scheme to price gouge customers. I mean, it's just there's such a narrative being formed, and I mean, there has to be an answer, I guess.
Well, I think I do remember a lot of quotes being like, it definitely was a consensus that we're going to give more back to share. We've been doing pump as much as you can for too long now. We're going to be measured and we're going to return value to shareholders. That definitely was a narrative. It was actually bollocks. And that's what's funny about this is I remember going on about it all last year. The consensus was US production wasn't going to come back. as aggressively. And it was spotted. When the price is high enough, they're obviously going to pump as much as they could. So they were saying one thing in the media and doing one thing with their actions. So accusing them of doing the very thing that they weren't doing, as in they were actually producing as much as they could, the evidence suggests. So I think the only thing they can do is point to these articles and say, you said in the press, but say, yeah, they lied in the press.
Apparently exchanged hundreds of texts with OPEC officials. But I mean, I don't know how that's pretty like. They could be talking about anything.
They could be, it's also just, again, it's this belief that you control markets. Like,
what are they going to do?
Exactly. They think, if I reduce by 100,000 barrels a day, what's that going to do? Like Guyana is added 700,000 barrels a year this year. You've got endless supply increases from loads of different countries. The incremental oil increases and decreases that I think is way overstated. But again, there's this belief that you do one little thing on the dial and it has a big impact on the derivative markets. Just not how markets work, or not how the oil markets work. I mean, anyone wants to test me on that, yeah, I'll prove to the nth degree how it just does not make sense, and that you have got to break down how the markets are formed and how the financial markets are formed, and then how the physical is priced off that. Like, you can't argue me on this. This is the thing that annoys me so much. But you will have people out there going, yeah. I remember even reading this thing about it was a book called The Secret Club Rules the World. Have you guys heard about this? It's a bit of a fantastical book, but kind of tongue-in-cheek title. But it's going into the oil traders and their the actual people, and this is about 10 years ago, and I guess 20 years back. So all these big names. I think one of them was a hedge fund guy who was doing a talk with market wizards, and in the middle of it, he's looking at his phone, and the price, he was long, and the price was going down $10. He's what's happened? Is the US sneakily release some reserves, or if they, something's happening in the physical? It's why? Nothing has come out in headline. Nothing. You can't just immediately produce all this stuff, and then in order for the derivative market to react, the derivative market participants need to know, and then they'll start selling. So you're not going to move down $10 without a lot of market participants having information, the same information. So this belief that something sneaky is going on is the ultimate conspiracy theory. How do you translate that into a price movement derivative? You need to prove to me that link, because there needs to be a seller. So yeah, I get overly passionate about this, but again, it's just the general point is attaching optics to price moves and then making it work for yourself politically. Another thing I've mentioned before is Obama was very vocal a long time ago about oil prices and oil traders pumping up the price and saying, you're destroying end users. And yeah, he's probably right, definitely right in some scenarios. But then what about the downside? So what about in COVID? What about when we went negative 37 in WTI? I'm pretty sure the end user benefited from that. You didn't go, this oil trader's smashing the price down. It's just unacceptable. You didn't say anything. So you've got to be consistent. Which one is it? Anyway. So moving on to, again, moving forward, the trade idea of the week. What have we got? Is this you, Mita?
Yes.
Okay.
So the trade idea of the week is to buy the July gas snap, which is the difference between European gasoline, EBOB, and European naphtha. So as we've talked about, European gasoline demand and European gasoline prices have been so poor lately, especially because of stop-outs in length, exacerbating this weakness. But I think the sentiment right now is that we've hit a floor, and that things should go up again with stronger demand figures, stronger RINs, and we're still awaiting Memorial Day figures, but we should expect gasoline buying to come as we go further into summer. And as for the naphtha end of the gas nap, naphtha has rallied quite a bit recently, especially in the paper market, and there's a bit of a disconnect with that and a weak physical market that's been going on. And these current high prices just do not make too much sense in terms of cracking demand and in terms of gasoline blending as well, with propane being cheaper on the petchem front, and just with gas nap being this low, it just does not make sense to use naphtha in the blending pool. And I think the market just looks primed, the contract just looks primed for a reversal, for a retracement upwards.
Yeah, okay. So can we look at a quick graph on this? Mm-hmm. Yeah, so I think I know what you mean. So we've had a big reversal from the highs. And this is, as I'm saying, we're finding these floors in Brent and gas oil. You would think a floor is obviously somewhere, but the interesting thing about this one, gasoline expressed as gasoline versus naphtha is actually a lot more common than maybe people realize. Obviously people trade the liquid RBOB cracks versus Brent, but I would say the industry generally speaking, buys arbor cracks to punt long, but also buys Q3 EBOB and the gas snap probably most significantly. And the gas snap has performed so well. If you take the average of the last kind of 3 years, it's been a real standout trade. So I think the aggressive stopping out we've had, the aggressive retracement kind of speaks to that, like overbuying over length, but also it does speak to stop outs. I've definitely heard the rumors myself. And the other thing is, as you say, everything people were banking on by being long is just about to start happening. So it's it's the weird time to stop out, but I guess you have to stop out if the price gets to a certain point and you can't take the pain. But as you said, loads of stop outs and a low price and the signals that kind of oversold. So it's the same argument as gas oil. If we've got this really kind of relatively low level and things are just about to start happening and the positioning is kind of much more balanced, then it's a perfect time, not perfect time, it's a great time to, on a risk reward basis, be long if you still believe in that narrative. So I think, it just makes sense basically. The only problem is, have we been bullish this year?
We have. I think earlier when the weakness first started, before the stop loss, before the weakness intensified recently, we did. I think we put out an alpha trade, for example, that was the long Q3 gas snap, which went the other way because of the stop outs that we've mentioned. Yeah. But
this is the only thing I would say is, I agree with you. The consensus generally it's a great idea, but it's easy to say, you should buy now on the way down, and then eventually it will rebound, you would think, more likely than not. So you can sympathize with traders being like, yeah, great, like I've been long that whole time though, so I'm not just going to buy again. That's the whole point. When you're wrong in terms of price action. But I guess you just can't help but say, we caught that wrong as well at one point. But this is the thing about the summer trade. If you've done it at the beginning of the year, it was a great trade. I think a lot of us benefited from the summer strength playing out early. It was just, you got to know, people see the summer strength play out and they go, oh my God, this is going to be the biggest summer ever, rather than think, I got what I wanted. It's the greed thing, right? So when it's on its way down, it's easy to say, but you can't argue from the facts. It's just the NAPFA point has been quite interesting, because NAPFA, you say it's disconnected from the physical reality. I see what you mean. It's just, if anything, NAPFA has been so weak for so long before this kind of strength. And at the end of the day, I just looking at this just simply from levels, where are we on the M1 NAPFA crack?
June is minus 9.6, July minus 10 essentially.
Yeah, so historically this is actually quite a low level. Again, we've talked about this the last couple of weeks, like everyone getting hyped about gas oil cracks being so low, like $18-19 per barrel is high on a relative basis. $40 per barrel is it was the new normal for the last few years. And it's the same with NAPFA. I've seen that positive a fair few times. And certainly in Q1 was a key trade. But -6, -7 would be like the lower range. So being -10 and that being super strong for NAPFA crack, that doesn't really add up to me. Especially when, as you say, there is a lot of propane buying a lot of cracker buying for petchem productions. Petchem margins are quite good in China. There's a lot of demand out of China. That, that didn't exist, 6 months ago when the NAPFA was weak. So I don't know. I just think I get your point. It's just maybe from a positioning point it makes sense, but the physical reality thing, it's all just like random numbers at the end of the day, a crack, right? It could mean anything. So I think it's more wise to look at the time spreads, and that is the indication of the physical strength. And if the time spreads are still holding into pricing, then the physical is there. Mm-hmm. So that's the only thing I would say with that. But
I guess just comparing it to the past few years, the things that would be different in naphtha, like you say, the cracking and how there's so much more propane, specifically dehydrogenation, as opposed to the naphtha cracking. There's also so many more petchem plants to make these blending components for gasoline as well, both like high and low octane, that is kind of subtracting some of the demand, at least from naphtha.
No, fair point. Okay, so this going to be an interesting one. I think we've already talked about the poll, so we'll get a new one out for you guys. And I think we'll leave it there. Thanks again for tuning in. Just wanted to point out again, we did a leadership podcast with Andrew Chen, our CFO. That was about an hour long, but it was really, really good. I really would love people to watch that one, because the first half might be a bit more like technical stuff. Second half, really getting into like building a business, scaling a business, and like the importance of, I'll leave you guys to watch it, but it was a very enjoyable one to have a chat with, and hopefully to listen to as well. So please check that out. And hope to see you soon for the next market podcast. So thanks, guys. See you later.